Good afternoon, Money.net Live. We are live here with Brian Shannon from Alpha Trends. There is no shortage here, sir, of things to talk about, right?
There is not. Let's start it out with Bitcoin.
Okay.
Bitcoin. So this is TrendSpider here, and I've
Yeah.
got two time frames up. On the left is the daily time frame. Sorry for moving it around like that, getting people dizzy. Yesterday, the market for some reason thought that Elon taking over Twitter was going to be bullish for Bitcoin, and we saw the market rally, and it came right up to these two levels on the left. This orange is the year-to-date volume-weighted average price, and the green is the volume-weighted average price from the 2022 low. So when we look over to the right, we can see that magnified on a 4-hour chart. It came pretty much up right up to that green volume-weighted average price from the low, and today we're doing what it's supposed to in a downtrend. That is to find resistance there, and we're seeing all those people who bought yesterday are either spitting it out or the short sellers are taking control and going to drive them out. But it's a pretty ugly looking picture for Bitcoin. Just focused on that daily time frame. We failed at the 45K breakout, and now Bitcoin has a habit of rallying just when it looks the worst, and it looks awful right here. If we look at that weekly time frame, I'm kind of thinking we're going to break this level. This black volume weighted average price has kind of held us up from the beginning of this move here. I'd like to see this market drop down to the 2022 low volume weighted average price. That would bring us down to about 33 or so.
Whew.
Yeah.
I hope you're wrong, Brian, but I understand.
Yeah. I mean, hey, you know what? Why not? We're in a downtrend. We're both, the average participant from, this high, this break higher here, are all losing money. The sellers are in control of this, and they can really, given the backdrop of equities, I think that they can really find that the ability to do that.
And the sellers have been in control the last few weeks. I personally am out of the market. So, yeah, you're right. There's the SPY right there.
Yeah, and you know what? I hate to say this, but it feels like a word that rhymes with trashy. But here's the weekly chart. The one good thing, I suppose, is that, this volume-weighted average price is one I've had an eye on, and we bounced nicely from there earlier this year. And now that looks like we're going to test that at about 413 or so. The only good news is that we've had such a strong sell-off that it's getting riskier for shorts down here. But if we're going to see a flush, it could happen. Now, the measured move would take us from 462 to, what is this level, 435. So that's, 26 points. If we take 26 points off of this 450, that gives, we've exceeded the measured move low. We're coming into that volume-weighted average price. I'd like to see us undercut this low before a bounce really comes. That would be really something to behold, I think, for most people, because, on the 30-minute time frame, we've been straight down. Here's a week-to-date volume-weighted average price. We crushed right through that, and it was a sucker's rally because it was below a declining 5-day moving average. As I mentioned, that's my key intermediate term indicator that tells me where to be cautious and where to be aggressive. The Nasdaq right on the volume weighted average price from the COVID low right here right now. That's a potential area that we're going to find some buyers. But what I'd rather see is the undercut of this low, take out the uninformed stops that are under there, get some uninformed short sellers, and then perhaps a bounce. But there's just, right now there's zero evidence that buyers are coming in to buy to establish any support. So that's just a potential scenario. The sellers are clearly in control.
And I think a lot of us that do own longer term, I think we're all sitting on the sidelines. So we're all waiting for that capitulation in a lot of ways, I think. So where do you see capitulation in these markets? I mean, do you see a massive sell-off coming, or do you see a wait-and-see approach here?
I'm because I'm a swing trader. It's always in bite-sized increments. So I don't like to make predictions or longer-term projections. But when you look at the weekly chart of the SPY and the volume-weighted average price from the COVID low, I think it's very realistic that we'll come down and test the volume-weighted average price from the COVID low. That would be about 380, 382, and that's
yet we've never tested that yet throughout the whole.
That's 10% lower.
Right.
So, in between, though, it doesn't go straight there, I don't think. In between, we take a VWAP off of this low right here, and that, perhaps it comes down to that level, makes a lower high, and then comes down to, the volume-weighted average price from, the beginning of the up move. And stair steps its way down. But we're clearly, we're below the declining 20, 30, and 40-week moving average. We're below the year-to-date VWAP. I'm in some short exposure to the Russell 2000, which continues to hammer on the volume-weighted average price from the COVID low, and that's also, as we've noted, the 38.2% of this move to this peak. This is 38.2% right here. This is 50%, and that's 61.8. I could see this market dropping down to the prior resistance and the 50% retracement. To me, that would be a normal type of move. So I think we still got room to the downside. people who are trying to buy the bottoms continue to get just devastated in all these names that are, down too much. PayPal continues to be a piece of garbage, hitting new lows. And, as does Facebook, as do, Upstart and all these former, let's call them glamour names, whatever you want to call them, growth leaders continue to get annihilated. So, you got to listen to the market, and it's clearly saying, if you're buying, you're just guessing.
And yesterday we got some news on Elon Musk buying Twitter, or now Tesla. Let's look at Tesla chart here. Tesla's down about 10.3% right now.
Yeah, we spoke about that last week.
Yeah.
And we talked about this level, 975. If 975 gives up, it's trouble. I didn't expect it to do that, but, and to give it up instantly like that. But this is really kind of one of the last growth names that's holding up. I guess you could argue that Apple as well. But, when you look at the weekly chart of Apple, it doesn't, it doesn't look like a bottom to me. And, back to Tesla, I think now that, I read something, Steve, and I'm not a news trader, but I'm aware of the news that, based on Elon's loan is if it was to drop, I think 46%, he would basically get a margin call. And I bet you anything that there, Wall Street, a lot of big banks are gunning against this to get him to, come up with a margin call basically for this. That would be a drop basically to what, 600, 80, 700, which isn't unrealistic. I mean, it's not that big.
And he's putting up his shares as collateral, and look, they're losing value here.
Yeah, exactly. And I think his timing, I don't know. It's not my decision to make. I would not question anything Elon does because he's a genius, and I'm just a dumb little trader trying to make points off of these little moves and, take care of my little corner of the world. But, we're on the 200-day moving average. There's zero evidence of support there right now. And we're just caving in. So you don't buy the dip, you buy strength after the dip, and you don't buy it the next day. Leave this thing alone. It needs to settle out is the way I look at Tesla.
Yeah. And, obviously, with his shares being put up a little bit, he's having to put up 21 million of them. So he's got a lot of money here it's riding to buy Twitter. So, all right, something else. Let's look at oil. You've been keeping track of oil a little bit?
I have. In fact, I just posted a chart of that.
Okay.
This is, let me just pull up the chart I put on Twitter.
Sure.
Because that'll be the quickest way for me to get to it. I do this on my laptop and all my other stuff.
And that way everybody can see your Twitter handle too as well?
Well, that's true as well. They can do that. Stop share. Let's share this. Where is it? Here we go. So I've been keeping track of the volume weighted average price levels in crude since, it basically went to zero. This is West Texas Intermediate, and basically it's, the equivalent of the COVID low down here. So we put a volume weighted average price off of that. And then, fourth quarter of 2020, it was hit. So we hand off a new point of control. We handed off a volume weighted average price there. It was tested here. So we hand off another volume weighted average price. It broke below that, but then came back and tested this one. So we put, as it starts to move higher again, we then anchor another VWAP there. That's that purple one. And you can see that this recent pullback, this is a weekly chart. The inset is the daily time frame. You can see that, the first pullback right over here about 2 weeks ago, hit it and bounced, to the penny. Now we tested it again this morning, and we're bouncing again. We're at, I posted this chart. It was, I don't know, we're up about $1.50, I think, from where
we're 101.18 right now.
Yeah, so I can't see the actual pricing on this one, but we bounced about $2 from that test yesterday. You can see that test right here on the daily time frame, it nailed it pretty much to the penny. So, we're seeing what might look like a descending triangle with these lower highs over the last month. So if we show another lower high and then we break that 98.5, 99 level, whatever that, actually that's about 94.5, 95, then I think you see another drop down towards this red volume weighted average price at about 90, and perhaps oil has made a top. I'm not calling it a top yet, but it's, we've got the potential. This is a descending triangle, and it's still innocent until proven guilty, but it's starting to look like it's undergoing distribution. It would be the most bullish way to stake this here.
Gotcha. Wow. All right. Well, thank you very much, Brian. Nice catch up on the oil there for sure. We nailed the Tesla trade again. You're right on target, and you were nailing the markets. You were saying stay short if there's no support there. So
yeah,
man, well done.
I don't want to get pinned to the short side. That stops on everything. We're approaching a critical level, and if it starts reversing, I'm going to cover my shorts. But you've got to be extra quick on the short side. Let me just point out another thing that I put on Twitter earlier about a trade in eBay that I'm short, and I had shorted it I'll show you here. Here's the daily time frame. So it's below the declining 20 and 50-day moving average, 100-day, 200-day. The weekly chart just looks like garbage. This, look at a 30-minute time frame. We have this prior support that was broken just in the last week. That acted as resistance. So we take the volume weighted average price off of this low from, 3 or 4 days ago. And I had shorted it right in here this morning. And, I was mentioning that I was looking to cover some if it got to daily S2. It didn't. Instead, and I mentioned this to Gav on Twitter. He asked me, what do you like short? I said this. I had covered half of it right here. And now my stop on the balance is right up there. So I don't want to lose money on a short. You've got to be extra quick, I think. But at the same time, if this now gets back below this afternoon, so this is today's low, and we have a little pattern of higher highs and higher lows. So I'm not going to add to it, but I would add to it this afternoon if it did something like this. And then I would want to short it, add to my short what I covered, add back right here, and lower my stop from this point to right here. So it's always fluid, it's dynamic, and it's not about I'm trying to nail this stock for a move down to $26 per share. It's about what can I get in the next couple of days, because we are, again, extended to the short side, and shorts become extra dangerous, just like the longs become extra dangerous as it rallies last week into that 200-day, the 20-day, and the volume-weighted average price off of that peak as we spoke about.
Wow. Very good stuff. That's been some serious knowledge today, Brian. Thank you so much. All right. And we'll see you back next week, same time, same bad channel. All right.
Okay. Take care.
Thanks, Brian.